Why do you think it's a sell?
So we have a $42 target. The stock's at 49. The street is looking for 57. All eyes should be on the Federal Reserve. An asset cap means it's hard to maneuver to grow the business. Since they reported late January, we're in a low rate environment where maybe the Fed increases rates one time. That puts all the pressure on Wells Fargo to grow the business from non-interest income. Tough for them to do, given that they have the distraction that hurts brand in the consumer bank and the mid-markets area for commercial lending.
Thank you for the clarification. I had the numbers reversed here, but and
Sure.
On that point, can you give me a sense of how much this company is in the position of having to prove it has innovated, it's cleaned house? I mean, it reminds me of sitting through a gaming commission hearing a couple weeks ago in Nevada, where Wynn Resorts was in the same position of trying to have to prove it has turned over a new leaf, with the CEO having been with the company since its inception.
Thank you, Contessa. It's a no-win situation. How can you prove that? They were disputing the customer approval ratings with CEO Sloan. At the end of the day, there were some things that were ferreted out by third parties that resulted in major changes at Wells Fargo. Sloan implemented those changes, and since then, all of the findings have come from Wells Fargo itself. They've identified it, and if that doesn't prove a cultural change, I'm not sure what will.
And the Fed's asset cap on Wells Fargo, is that having a lasting, damaging impact on the company and the stock, or only temporary?
Well, in Wall Street terms, it's lasting. My view is it's temporary. I believe that next year, 2020, we'll see the asset cap lifted. They're taking the actions. I do think they're facing some hurdles with the Fed. They've presented plans and they've been rejected. That's good from the Fed side of things. It's bad for the Wells Fargo side of things. But they will go back and refix it, and they will then meet the terms of what the Fed is requiring. And when those terms are met, it will get lifted. Now, is it the first half of next year? I think it's probably going to happen towards the back half. It could even slip into 2021 before it gets lifted.
Ken, do you think it's to be expected that Wells Fargo stays in the spotlight, the political crosshairs, if you will, for the next 18 months, given that we've got an election coming up? And if so, does that affect the outlook for the share price or not?
Well, what affects the share price is performance, and the asset cap limits them in terms of loan growth, which was down last year. When you look ahead to the bull case for 2020, you would need to have a very friendly environment for banking, which includes rising rates. I think in time, the issue related to what Congress was interested in probably goes away. But when we look at Wells Fargo's competitors, they have an open field to gain market share.